mind, in my head. This is where we all came from. The dreams we had, the love we shared. This is what we're waiting for. And in my mind, in my head, this is where we all came from. The dreams we had, the love we shared. This is what we're waiting for. In my mind, in my head, this is where we all come. In my mind, in my head, this is where we all come. In my mind, in my head, this is where we all came from. The dreams we had, the love we shared. This is what we're waiting for.
Welcome to Market Makers, everybody. Your home for tomorrow's TA today. Often imitate it, never replicate it. Give me the trades. Today is time cycles and potential trade setups. Everything I say is my own opinion. Do your own due diligence, but I think you guys will really enjoy this video. Soon, I'm getting fiber optic here at the ranch, and I'm going to be teaching vis-a-vis live streams on our Discord. We're going to do a live stream series, education series based on the current charts in the market. Nothing more I hate than these people that record videos from 5 years ago and then sell them for a bunch of money. Guys, if you remember, all our Discord members are going to get our education, the education we have existing already, and my new series as well for free, part of being a member. You can message Lee in the Telegram for all the details because both the exchanges that sponsor the show will pay for your first month. So you guys may want to check that out sooner than later. Let's talk about the markets. Some cardinal points in the markets have been hit. We had the spring equinox, March 19th. Again, in Bakken.com, the day after the spring equinox, the market's topped. We haven't had our retracement. We have the strongest, most concentrated rally in stock market history since 1971. And why is that significant? Because the following year and proceeding after that, the market sold off 66%. Still looking for that turn in the marketplace. We have time cycles that are aligning, which I'm going to show you in this video. Lots of people ask me about time cycles. I'm going to show you some of the key big ones that are aligning, like magic stars right now, as well as Fibonacci sequencing kicking into effect in this video, guys. So without further ado, no monologue, Lee. Let's go ahead and start the show. All right, boys and girls, just a reminder, if you want to trade these Ponzi markets, support this program, check out our sponsors, SimpleFX and BingX. Our rewards are exclusive to our link there in the video description. I'll pin it in the YouTube comments. Message Lee with any questions you may have. Our channel, unfortunately, is not monetized, and we don't play by the YouTube rules with using certain titles, clickbait titles, shit like that. So they don't promote our videos because we're not monetized. So guys, share these videos, like and subscribe. Leave me your comments below. I respond as always. Let's talk about time cycles. I want to start off on the E-mini because this is the largest multi-trillion-dollar market in the world, right? As goes the S&P, as goes the world. Let's look at some key cycles. Start off on the monthly time frame. Let's go back to the last massive Ponzi crash, 2009. Let's see if you have any significant cycles going up to the current month right now. 180 bars. When you're looking at cycles, when I'm looking at cycles, I'll use bar counts, I'll use calendar days, right? These are two different methodologies for determining cycles. 180. Remember our geometric shapes we were showing you guys. Remember the circle. 180 is a key pivot point, 180 months. So that we're 180 months from the GFC low. Well, that's interesting, Brendan. Let's look and see if we have anything else that's interesting. What about the plague, the pandemic low? The pandemic low to your current monthly high, 48 bars. Remember, 12 months in a year, guys, for those of you that went to public school. 12 months in a year. So this is a 4-year cycle from your plague low, your pandemic low, okay? So 12 months is a key cycle as on its own. But when you're looking at a 4-year cycle, many people are aware of this. WD Gann came up with many time cycles. Lots of the legendary traders did as well. Again, what are we doing when I'm showing you these time sequencing? We're looking at areas of confluence. For me, trading is all about confluence. If you're looking for resistance, the more resistance, the better. If you're looking for support, the more support, the better. So when you're looking at tops or potential tops in the marketplace, I line up all the factors that I can so I can make better educated decisions. So we have a 4-year cycle. Now, if we're looking at Fibonacci sequencing, long-term subs have seen me do this many times, but we have 1 blue month, 2 blue months, 3 blue months, 4 blue months, 5 in a row. 5 is a Fibonacci number. Oftentimes in Fibonacci numbers, you begin to form reversals. Obviously, this month is not closed out yet, guys, but you have 5 blue months in a row off of your October low. Now, people may say, well, that kind of sounds like TD9. So those of you, I get a lot of questions about TD9. I know some people on YouTube, somebody told me some people on YouTube use it. TD9, that's Tom DeMark, right? That's the 9 count sell signal, 9 count buy signal, 8 count. Sometimes it's a 13 count. Most of these systems that people package and sell to you, including Elliott Wave, were developed over 100 years ago. The TD9 system came from W.D. Gann, who wrote that look for trends to reverse in 7 to 10 bars. That's where the concept of TD9 came from, okay? I want you guys to understand the grift in the TA space is to take something unique and original, package it, make a bunch of rules for it, and then sell it as a trading system. And then you can sell it on your website for $1,000, $2,000, $3,000. And unfortunately, some people buy it, when in reality, all you need to do is study the legendary traders or watch channels like this, and you can pick up these techniques, okay? So this is what you're looking at. You have a Fibonacci count of 5. We have a 4-year cycle. Let's go ahead and go down to the weekly count. See if we have anything interesting here. If we go off that October low up to the last blue bar, because this is the first bar of the new week right now, 21 bars, Fibonacci count, right? 147 days. Remember, 144 is a key harmonic cycle. So you had 21 bars, 147 days. We'll call it 144. And now you have a red candle. Granted, small baby red candle, no big movement yet. But again, looking for confluence in the marketplace. Now, let's go ahead and do some TA as well. So we have key time cycles, guys. We have cardinal points in the market just past the spring equinox. We spent a video last time talking about all the key events that have happened in spring and fall equinoxes related specifically to the markets. So what you need to do is start to develop your theory here. What do you think the market's doing? The longest and strongest bull run up in a straight line since 1971. Okay, in other words, not a common occurrence, a 29% up move. I personally am looking for a retracement. I'm looking for a top and a retracement because trading for me is about risk reward. The reward to me, I'm not buying an all-time high. The reward to me is to the downside. Then we shall see how the candles behave. But I think you're getting an 8 to 10% retracement when we get our top. So now that we have time cycles giving us a predictive, remember the methods I really practice, pattern trading, predictive, time cycles, predictive, smaller cycles, predictive. I'm looking predictively at the marketplace to give me confluence, and then I'm looking for a pattern to form to trade with my market bias. That's how I like to trade, guys. Guys that like to react to the marketplace oftentimes miss massive trades and massive moves in the marketplace, and I don't want to be that guy. So when I look at this, guys, I want to pull my fibs the same way on all the different indices before we get to Bitcoin, Solana, and Ethereum. So when we're looking at this, the 1618, 5286, currently you're below it at 5285 right now at the time of this recording, okay? So we achieved harmonic expansion. This is part of natural law of trading. For those of you that don't understand what natural law of trading is, it is a key element. You have market geometry, you have patterns, and you have Fibonacci. This is all part of natural law of trading in combination with cycles. Why? Because everything that's ever happened in the market before, massive rallies, massive crashes, has already happened and will happen again in the future. And the key is to understand what causes this and the signs that you get, the digital footprint on your modern day charts, what causes these things to occur. from as small as a normal run-of-the-mill retracement to a massive crash. So Fibonacci is a measure. I mean, this is mathematics, guys. This is a measure of proportionality and is present all throughout the universe, is present in the DNA helix and proportional relationships in your body and relationships to planets, and it's present in the marketplace. Okay. So it makes me laugh when people leave a snarky comment about, oh, you're talking about the eclipse or you're talking about lunar cycles or solar cycles. What do you think Fibonacci is? All of this stuff is part of natural law of trading. Understand market cycles can be affected by external factors the same way FOMO affects the market, fear and greed, lots of different things can affect the marketplace. Everything is about confluence. So again, we achieved our 5286. So when I look at this, guys, if I'm looking at trade setups, this is nothing of a retracement. This is just a very small move, especially on the daily time frame. But first, I want to identify my top 53.22. So when we look at this, let's go to a smaller time frame. I want to go to, let's just start off on the 5 hour here. You can see you had a nice little sell-off down. Two things you need to understand in the marketplace, guys. When you're looking at trades, most people on YouTube do not understand these concepts. They don't understand the concepts they originally were developed by Charles Dow, Wyckoff, W.D. Gann, Harold Gartley. These guys understood the concept of wave movements. So oftentimes, if you see anything like this, you have people saying, oh my God, it's going to crash, right? But understand the trades I'm looking for are 3-wave moves and 5-wave moves. What's a 3-wave move? We talk about it all the time. It comes up to form a double top at resistance and then break down. What's a 5-wave move? 5-wave move is your wave up, wave down, wave back up. Maybe you get a higher low and then you push back up. That's your 5 waves. The whole marketplace can be traded with W and M patterns, 3-wave and 5-wave moves. Guys, this is going to be stuff I go over in my education series when I start streaming it. So I'll keep you guys informed because that's like the number one request we get on our Telegram is everybody who says, can you do like an A to Z for your method of trading? It's not going to be beginner based, guys. I'm not going to show you how to use trend lines in TradingView. I would say it's intermediate to advanced. There's tons of channels, information, books out there for the very basics of beginner. I want to give people some advanced techniques in the marketplace. So knowing this, knowing that we have this small sell-off, knowing that you have a high, if you think, again, this has to do with how you view the market. If you think the market is going to start topping here over the next week or two and start to break down for a retracement that is long overdue, that is my particular view, then I want to look at key levels to trade. E-mini S&P, I'm looking at 5,300, 5,312. What does that mean? That means in a 3-wave move, price would do this, come up to the 786 or 618 and start to break down, ideally taking out that neckline. Where am I trading it? I'm trading it on that resistance of the second top. That's how I'm trading the market, okay? So we don't have that move yet. We have the initial wave 1 down, need that wave 2, or the initial wave 2 down, need that wave 3 back to the upside. And how does this get invalidated? Well, if you want to trade the way Gartley traded, he would not take the trade, or he would get out of the trade once you take out that fractal high, 53.22. That means, guys, sometimes you get these double tops, especially in Bitcoin, where the second top is higher, and that can stop you out. So another way I like to trade, guys on the Discord know this already, is with ATR, average true range. Again, concepts I'll be talking about in the education series. But that's just one way to trade this, guys. That's what I'd be looking for, is the move back up. The move back up after this minor sell-off, where does it find resistance? With the time cycles kicking in, cardinal points in the market kicking in, I want to be involved in a trade for an 8 to 10% move. It's going to be a juicy trade if it plays out. Let's go ahead and move forward. Looking at the NASDAQ, we're going to pull the fib the exact same way. Why are we pulling it from these December highs? Remember, this was peak participation in the marketplace. And then a lot of this afterwards was all divergent, right? All of this was divergent indicators. So I want to see the proportional move, and we never got there. 19,034. NASDAQ right now is at 18,516. So what I like to do when this occurs, I like to zoom in. By the way, guys, if this is too in the weeds for you, this education that I'm doing, let me know in the comments if you just literally want basic TA, because I think some people enjoy this and some people, this is probably giving them a migraine. But when you're looking at this on the NASDAQ, I'm going to go down to, let's just go to the 5-hour chart. See what we have here on the NASDAQ. So I don't have a pattern per se. We have a minor sell off right there. Let's look and see if we have any W. I mean, you got tons of W patterns here in the marketplace. I need to zoom out, see if we can find some better fractals here. Let's go to the 8-hour time frame. Squish this in. So a key pattern that formed here after that December high is this W. You see this? W broke out to the upside. So what I want to do is take this fractal high right here on January 24th, pull that down to that fractal low of the W, and now look at your 1618. Now it makes sense why you got to that target, right? So just understanding Fibonacci. Lots of guys use Fibonacci on YouTube. They don't actually understand the concepts. They don't understand how it works. Fibonacci books, the best written books, are literally like math books, okay? And a lot of people hate math, including myself, force myself to learn Fibonacci and how to actually apply it so that it makes sense. 1618, 18695, hit it beautifully. You only got $9 above it. So when we're looking at this now in the 8-hour time frame, let me zoom in some. You have this minor sell-off, right? You have a minor sell-off, three-wave pattern that could form coming back up and then breaking back down. Doesn't have to, right? It could do a 5-wave pattern, wave up, wave down, wave up, wave down, higher low, boom, break out to the upside. You can have that happen as well. This is the joys of trading. But let's just pull a fib on this 8-hour time frame to see what we're looking at here. If the NASDAQ comes back up to 18,650 or 18,600 and finds resistance on this three-wave move, again, all these three-wave move, guys, I mean, I can show you this just with an ABC, right? So you can just take an ABC tool, pull this up, and you're just looking at that type of move, right? All these three-wave moves are 3 waves for the double tops, 5 waves. You can get head and shoulders. You can get W patterns, M patterns, right? So these are all moves that are happening right now on the American indices to a large degree. So we're going to go over all of these. And we look at this again. So 18,650, 18,600. If we get the resistance at that area like that, I'm going to look to trade this up in that range. If we get resistance, if you just break through, then I'm not looking to trade it there. I want to see the next levels up, right? See the next levels up, the next targets, 18.8, almost 18.9, see if we're moving up in the marketplace. But that's the rebound that I'm looking for on these indices. But over the indicators, many times they're all divergent, as you guys know. So I'm not going to waste time on it. We look at the Dow. Dow has the same problem, I believe, as the NASDAQ. This fib pull is not going to give you anything specific here. Yeah, it's between the 1272. It's coming back to the 1272 at 39,664 and the 1618. So let's look at the Dow a little bit closer. If we pull the Dow, we have this rollover here with a fractal up to the upside. If we pull the Dow, let's see what we get. If we pull from this fractal high down to this low, you got above your 1618 at 40,000. Let's just zoom in here and see what we got on the Dow. If we go, this is all part of target selection because you have a nice sell off in the Dow right now. Go to the 8-hour time frame. And when you're looking at this, here's your fractal high. You can go to your fractal low. And you got a nice hit here, almost at the 2 fib, 40,348. And the Dow's selling off beautifully. And you want to see where this retracement could go to as part of this move here. You can click there, up to the upside. You just passed the 618. So this, again, is first part. This is your wave 2, right? Wave 1, wave 2. Want to see a rebound back to the upside. If this was something I wanted to take a shot at and trade, I don't like pulling this fib yet because we're not done going down, but just as of right now, 618's at 40,000, almost 40,100, and the 786 is at almost 40,200. So I'd be waiting for this type of move, find that resistance. If it holds, take a trade, let the market break down, do its dirty work for me, begin that retracement. We're looking at the Russell. The Russell's still stuck in our tight Wyckoff trading range. Doesn't matter. We put the ceiling. I had it here last time to show you guys these peaks, but I'll put it up here at the fractal high. And you can see you're above the range. Now your high, identify your high in the range. Your high in the range is 2132. You're at 2105. I expect this market to fail with the other markets. It's not selling off much today, but there's your W pattern. So I don't really like the Russell here for a trade unless I could find something in a smaller time frame that gives me some type of idea what it's doing. And here on the 3-hour time frame, you can see you have your three-wave pattern, right? Now remember, smaller time frame patterns don't carry the same amount of power as larger time frame patterns, but this is your three-wave pattern. So if you were interested in trading something like the Russell on a small time frame, be looking at that. I'd want to see the Russell get to 2116 or 2123. This is the E-mini Russell, of course. So I'd want to see the pattern come up, make our top just like this, and then start to break down and give me resistance up in that zone, which is where I would want to personally trade it, break that neckline, further confluence for downside in the Russell. Let's talk about the ones you guys really want to see, which is Bitcoin, Ethereum, Solana. Again, Bitcoin is doing what we thought it would do. It hit our Fibonacci target. We looked at this from the spectrum of ideas and my trading mind. We had a 6.5% increase from previous all-time high to the last all-time high, then a 6.5% increase to the current all-time high, right? This allowed me with Confluence to identify with Fibonacci where we would go from our diamond pattern breakout. October 23rd, shared this trade with you on YouTube. It went up 120%. Now I'm looking for a short. How am I identifying this short? Well, we have our 2 fib up here. Look at this. Look how beautiful this thing tracked. You have our 2 fib. Do you guys see the three-wave pattern? 73,765. Now, Bitcoin is highly volatile. This is a 3-day chart. We're going to zoom into a smaller time frame, but I want to show you this. We pull a fib from our fractal high to our fractal low. Then I'm looking at 71 to 72.5 for Bitcoin to find resistance in this kill box, right? If it can find resistance in this kill box, I want to see it top and then start to make a pattern on a smaller time frame and start to break down. That's what I would want to see for a top. How many people on YouTube, how many people on Wall Street, I saw JP Morgan, were thinking this was just going to continue to sell? No. Prices, especially the tradable moves you want, move in 3 and 5 wave patterns, guys. That's how they move. And this is very typical. Hit a peak, sell off, rebound to the upside. The key is, will the resistance hold or will it be broken through? And you'll see Bitcoin go to 77 or 81, almost 82K. That would be your next upside targets there if you can break through that peak of 73,765. So let's look at this on a smaller time frame. Let's go to the daily. You can see this more clearly here on the daily. Got this nice pump up. So watch these levels, guys. Watch 71 to 72.5. See if we get resistance in that level. Start going to smaller time frames and see what happens here if you're breaking out to the upside or if you're beginning to fail. These are all key levels to watch. If we look at this, actually, let me look at this on a 5-hour because you have a beautiful W here that formed. Do you see this? So again, here's your W pattern. You have your beautiful W pattern that formed, can take measurements from our W pattern, pull this down. You can see the 1618 right there at 72K. So again, 71K, 72.5. Let's see if Bitcoin comes up, finds resistance in here on a smaller time frame, like the 3-hour, 1-hour, 5-hour, makes some type of pattern like a double top. Give us an item to trade here. Give us a nice trade setup. I might set my stop loss somewhere right above this area, but be aware, Bitcoin often does that move where it pumps up above the first top to get everybody stopped out and then reverse. So always have to be in mind with that, which is why I want to look at confluence with the other markets as well. That's what I'm looking at for Bitcoin, guys. Let's go ahead and move forward. Let's look at Solana. We had a beautiful 21% drop, posted that trade on our Discord. We came up and tested the 204, 205 area, back tested it, and then fell 21%. And now Solana here on the daily, again, same thing, guys. You're seeing this all over the marketplace, is maybe a rinse and repeat trade. We'll have to see how this performs, once it hits resistance. 786 is at 200. Your first 786, and your second 786 is at 205, the larger 786 from their all-time high. So 200, 205, watch that range for Solana because it'll print you a beautiful 3-wave pattern. If it holds as resistance, maybe a good tradable area once again in the marketplace. Looking at Ethereum, had some interesting price moves here on Ethereum. We have the 786 from the all-time high. Nailed that, right? 4,013. Nice drop off all the way down to 3,600, just below 3,600. And now you're getting a little meek rebound back up. When you look at how Ethereum moved, it did a beautiful ABCD pattern. It did this pattern right here, ABCD. This is AB equals CD. And Elliott wave terms, this would be your A equals C. And the key thing when you're looking at these patterns is you want to look for, use a trend-based fib, you want to look for the 1 fib, the 100% move, because you're looking for reciprocal moves in the marketplace. Market symmetry, part of market geometry, part of natural law of trading. Look where your 1 fib is, 875. Look what Ethereum got to. Beautiful, perfect hit, almost literally to the dollar. Almost to the dollar. You have 881. 875 was your 1 fib, and then you rebound that back up. Notice your 786 at 4013. Market likes to move in patterns. Let's take the D point. Let's come up here to this level. Pull this down. Look at your 1 fib, 4006, right on top of the 786. Coincidence, right? That's perfectly where it retraced from. This is understanding how market prices work with natural law. Coincidence, it rebounded off the 1 fib after an ABCD. Coincidence, it retraced from the 786 to square root of 618 and the 1 fib right at 4006. And now we fell back to the 618 and are pumping back up. So let's look at this on a fib pull down for targets. I love coincidences. You can make a lot of money with coincidences. Let's go ahead and look at this fib retracement from your high down to your low. 618 is at 3,700. 786 is at 3,872, almost 3,900. So same pattern, all the charts, guys, all the charts that are worth looking at for trades. I want to see if this holds resistance up in that range. If it does, could be a potential trade. Have to see what the other markets are doing as well. Let's look at the DAX. The DAX has not done a pullback yet, right? So this is the key thing when you're looking at target selection. This is just up, right? Key resistance, 18,566. We bounced right off of it. But what's the difference between the DAX and some of these other indices and coins that we were looking at? The DAX hasn't done this yet. This is what it needs to do, this move, this part of the 3-wave move. You got your wave 1, want to see the wave 2, trading the wave 2, right? That's what you want to, or the trading the wave 3 for the second peak, but that's what you want to see. And the DAX hasn't done that yet. So want to see if this holds 18,566. I have my next level up at 18,641 for a different fib pool, but we're just watching the DAX for now. I'll let you know when I think it's setting up. Looking at Euro Stoxx 50, this is a different story. Euro Stoxx 50, let's go to a 3-day chart here. This is giving some nice trade signals here as well, if it holds. So let's go ahead and look at this. One thing I'm always looking for is market symmetry. This would be called a 1-to-1. Look at it. So you have this wave up the market low, October low or September low, just like the US markets, 25% up move. Let's go from here. October low with the US markets, and you have a 25% up move, right? About a percent difference between the two. So this gives you that type of relationship and a fractal form. And let's look at this from Fibonacci. We pulled a Fibonacci from our December high down to our low, 1618, beautifully struck, 4,999. We've been talking about this for a while now. You're at 5,008 right now as I'm recording. Does this mean it has to tank? Does this mean it has to fall apart? Nope. I'm just looking for a top and a retracement, guys. When you start looking at patterns, again, this is what we are already done. We've done our 3-wave. Here's your wave 1, here's your wave 2, and there's your wave 3. I want to see if this area holds just above 5,000 here. And if this starts to top out, which means I wanted to see it stay below 5,033. I want to see if this area holds. And this will be something I'll be looking at trading on our Discord as well. If we start to roll over and take out our support here, right there at your neckline, 4,923, be looking for that retracement to the downside. 3-wave pattern. And all of these patterns, guys, if the markets turn even more bullish, obviously can turn into what? They can turn into W patterns to the upside. So always something to keep in mind. Hope you guys enjoyed this video. Like and subscribe, and I'll definitely answer your comments as always, and hope to see you guys in the Discord. Have a great week. Talk to you Thursday.